Hello and welcome to the Fife Property Market Update, and this is May 2025. Before we get into it and we look at some facts and figures and some brilliant insights, we will QVT. So this is a great topic, whether you're a buyer, a seller, or just curious in the market. This is a brilliant one. Now, we do obviously every week do a weekly market update, but this really just helps us get into the kind of the nitty-gritty and really look at the facts. Because are you perhaps considering moving home in Fife in the next 6 to 12 months? Or perhaps you're a Fife landlord deciding whether to grow your portfolio and expand, or maybe the opposite and actually sell off a few of your properties? Or are you perhaps a first-time buyer wondering if 2025 is the right time to move? And actually, if you are a first-time buyer, we did a brilliant topic last week. Go back and watch that, and that'll give you an insight if you are obviously a first-time buyer, the show that we did last week. Understanding whether the current property market favors buyers or sellers is key to making the right call. And we always say make informed decisions. As I say, we do the weekly updates every Tuesday now. They're on a Tuesday now live. So you'll know some of the most reliable ways to assess the market and where we get our facts and figures from. We take it right from our weekly updates, come right from Rightmove with all agencies. And that helps us look at properties that are sold, subject to concluded missives, under offer, but also what's new and coming to market compared to the total number of properties on the market. Perrie, do you want to kind of show that in practice and put some kind of numbers to it?
Yeah, I think it's really important that people do understand that, because it does, as you say, give them the opportunity to decide whether now's the time to sell or buy, or is now the time to get on that ladder. And so when we look at some of the practical parts of it, we're looking at, say, there's 500 properties on the market in this location and 200 of them are under offer, for instance. Then as a percentage of 500, that's obviously 40% that are under offer. So you've got 60% availability. But is that percentage a strong indicator of the local property market and the temperature of that, and whether or not it is the right time for you? Can it give you the upper hand if you do understand this and how you can play to get the property that you want at the price you're happy to pay? Is it a buyer's or a seller's market? That's really important for you to understand as well, because if you're a seller, obviously you want to maximise the market, and if you're a buyer, you want to try and get a property spending the least you can. Everybody does, don't they? So that's really important for you to be able to gauge that. So some of the barometers that we look at are whether it's, say, for instance, an extreme buyer's market. When we look at those percentages that we spoke about earlier on, 500 on the market, 200 under offer, that's 40% under offer of what is currently available. So if we look at extreme buyer's market, we say that that's really anything from 0 to 20%. So that's the number sold in that location. So again, for the buyers, that's fantastic, because what that technically means for them is they've got so much additional properties to look at. Because again, if we use that example of 500, if it's 0 to 20%, if we go with the maximum of 20%, then actually that's 100 sold and 400 available. So for the buyer, that's a really great position to be in, because sellers are motivated still to get moving. And so they know you've got a lot of choice. So they will have some recorrections, I guess, in their minds of actually what they perhaps anticipated they were happy to accept versus the reality of it, especially if they've already found something. We constantly speak about this, don't we? People move for a reason. So there's a reason why they're moving. They're galvanized to do that. Some of that can be health, some of that can be emotion, some of that can be family changes, but really important to understand that. So if you're in an extreme buyer's market, it does give you the upper hand a little bit. We can then look at what we call just a general buyer's market, which is 21% to 29%. So again, if we look at that in theory, 30%, that would mean 150 are under offer and 350 are still available. So again, it gives you good insight there. A balanced market, we would say, is really roughly where we started, between 30 and 40%. So that can go either way. And actually the buyers and sellers are pretty level playing field. You can decide if you want to accept that buyer or move on to the next one. and you can decide if you're going to sell now or hang on for 6 months. But it's a really good position to be in. If you're then looking at a seller's market is when there clearly is not as many available. So we would say that's anything from 41 to 49%. So in that example that we gave earlier on, if there was 500 properties and 50% of them say are under offer, then you've only got availability of 250, haven't you? So actually then the buyer's got less choice. So the buyer then generally has to pay more because the seller has that opportunity to do that.
Mm-hmm.
If it's a hot seller's market, we would say that's anything between 50 and 59%. And then an extreme seller's market is 60%. And I would say for me, with the experiences that we had through the COVID years, not that we keep referencing to that, but it's a good example of where actually that was an extreme seller's market because there was less property coming to market. And when it came to market, it was selling fast. So that was great for sellers because they could pretty much name their price and buyers would pay it. So that's how we would gauge that. But how does all of that compare into kind of Fife as a comparison, Sophie?
So looking at some historical data, from the advisory, which has actually tracked this metric for years, you can actually observe some key trends for each May since 2018. So in the years before the pandemic, which I know feels like a lifetime ago, in the Fife's market, the percentage figure was 52% in May of 2018 and 50% in 2019. Now, if you fast forward a wee bit, just to May 2020, and that was the kind of midpoint in the first lockdown, the percentage dropped slightly, as you would expect, to around 46%. So 46%, still a seller's market though. Demand then kind of rebounded sharply post-pandemic after the end of the lockdown. And then in a year later, in May of 2021, the percentage had risen to 80%, which don't forget that means extreme seller's market. And then into May 2022, it was sitting around 76%, which is still, because it's over the 60%, is still an extreme seller's market. Yes, there was a drop, but actually only by 4%. So still strong seller's market in May of 2022. And we can see that. And we see that probably as agents, Perrie, when we're going out, and anybody that bought in 2022 and they're now looking to sell now, because it was an extreme seller's market and they paid astronomical amounts over. Sometimes we're going out to properties just now and we can't recoup that because they paid so much more over for it in 2022, and it's hard because there is a ceiling price.
Certainly in some locations we're seeing that there absolutely is a ceiling price on some property. And when people were offering so much more for a property as well, they weren't necessarily even offering that for the finished product. They were still offering that for properties that still needed work done to them. So they may have overpaid extremely for it to secure it, but actually then invested a lot of money renovating it. So not only have you overpaid, you've then renovated. And how do you recoup that? Because we have to do a comparison to comparables as well in regards to that location and the way that property is finished. So it doesn't often happen, but sometimes it can happen when actually people have to cut and run a little bit sometimes, don't they?
Yep, absolutely. And it can sometimes be a little bit of an uncomfortable conversation, but it is the harsh reality of we're still, perhaps seeing the effects of that pandemic and what it did to the market. Because then the fallout of, Liz Truss, the budget, and then in the late 2022, then it meant increasing interest rates. But by May 2023, it settled slightly to 66%, but still, again, that's still a seller's market when it's sitting at 66%. But then if we take it to just last year, so in May 2024, we saw a further drop to 57%, which brings it down just into the next bracket of hot sellers market. So that was obviously 2024. Now this year, so in May of 2025, the figure is sitting at 58%. So 1% higher than last year, meaning we're still sitting in that hot sellers market. Yes. And actually, if people prefer like a visual representation, we actually do have a graph for this, which maybe helps reference this a bit easier. And it also helps you see the real spikes and the highs, and then obviously where it drops slightly, putting that in since 2018, obviously up until May of this year. And that is the percentage of properties marked as sold or subject to concluded missives on the 1st of May of each year in relation to the total number of properties on the market. And then obviously you can see at the side the barometer, thermometer, whatever you want to call it, showing you what each obviously percentage bracket means. So that's a great visual representation, because you can see where it goes so high with the pandemic, and then it has leveled out kind of over the last 2 years. But when we look at this, we're dealing with facts, and it's saying that it's a hot sellers market. But what does that mean? I mean, is there any implications because of that then, Perrie?
I think in regards to some of the firm places in Fife, you've got an upper end of a hot sellers market. You'll always have that. And that means that sellers hold a more dominant position. And buyers kind of really do have to bring their A game a little bit, don't they? So they have to be in a positive position. So again, if you're a buyer and you have a property to sell, our recommendation would always be get yourself marketed, put yourself in the strongest possible position, because you will be competing against other buyers. So where that kind of can impact you when we're in a hot sellers market is that sellers may have 3 potential buyers. One is a cash buyer. They're not as frequent now, I have to admit, with all the second home taxes, etc. However, your cash buyer is still spending on average about just shy of £200,000. So if you're in that price pot, then you're going to have potentially a cash buyer as an option. You're going to have someone who's already on the market and is under offer, and then you may well have a third option where this person loves your property, they have a property to sell, they've not even started. So I think for me, when we talk about the buyer's A game, I think that really is getting themselves in that strongest position, because we've seen that recently. I know I have, where actually buyers have missed out on their dream home because they're not ready. Or what then happens is they find the dream home, that seller's willing to take that offer, but have stipulated, but we need you to be sold in 4 weeks. And if you're not sold in 4 weeks, then we're going to relist our house and it won't be yours. And that's happened a couple of times recently. So what then happens is the buyers put themselves under so much pressure, because they've got 2 elements here that they really need to try and cover. The first one being they want that dream home, they've got their offer in, but now they've put themselves under a lot of pressure timeline wise, because actually they've got to get themselves marketed and under offer within a 4-week window. Secondly, by the time you get home reports done, you get your photographs done, you're probably eating into that 4 weeks by a week already. So in essence, you're looking at getting a property sold in 3 weeks. And that's a lot of pressure to put yourself under, because actually as a buyer, you're then really full throttle, because you need everything to happen really quickly. And in this type of market, you're relying for your agent of choice to be free to be able to do that. So, if you've got an agent who has marketing strategies, who, like ourselves, wants to do videos, etc., we need to work together with timelines. So don't leave yourself short of time, I think would be my really strong part to kind of pass on to you as regards to a recommendation, because getting your A game right is really crucial for you to be able to move forward. And it can all go horribly wrong, and actually can be really disappointing for you if within 4 weeks you do lose out. Not every seller will do that, by the way. This is just examples that we've seen recently, but it does happen. And actually, we've even had it happen where the buyers maybe come forward with the highest offer and the seller has rejected them as a buyer because they're just not ready. So it doesn't necessarily mean that because you're going to offer top dollar, the seller may not necessarily class that as your A game as a buyer. Your A game is being ready to go when they can and paying a price then that they're happy to accept from you. So definitely you need to look at that as well. With sellers as well, the patience and the presentations and the precise pricing for me are not always optional. I think they really have to be essential. I think that buyers are enjoying more choice. It's no longer enough to simply list your property and wait and see what happens, because buyers can easily pick another. So we've had situations recently where we've had 3 properties in the same street, and each one is very different, and the buyers might want to see multiple. So the buyers can have some choice there as well. I think that absolutely as a seller, you need to get yourselves in the prime position. So make your house stand out. I think that's really important. Other than making it stand out with the marketing strategy, what other things do you think they need to do, Soph?
Well, something, and we speak about this so much, is price. It's 100% the price and being accurately priced, and you need to be priced from day one. Yes, you need to have your strong photography, the floor plans, your virtual tours, whether it be your location tour, whether it be the video walkthrough. You need to have it both marketed properly, both offline and online. But honestly, if you overprice your home, expect it to linger on the market, especially as there is more stock coming to market. You need to be, we're not asking you to undervalue your property, we're asking to just be realistic. Because when, a property lingers, price reductions then tend to follow behind it, which then means buyers' confidence drops, because we say it again and time again, no matter if there is absolutely nothing wrong with your property, there's nothing wrong with your property, I know there's nothing wrong with your property. As soon as they start to see price reductions, that is where the mindset goes of what's wrong with it, why is it not selling? And then people do lose confidence. And then you kind of lose leverage when it comes to negotiations. As much as we're experts at negotiations, when you're having to do price realignment, because it was actually put too high in the first place, it makes things difficult, which
It
then
does do.
often results in lower offers. And also, the longer that you are on the market, the more likely when you do secure that buyer is actually the fall through rate before you've even actually signed missives and exchanged. You need to take that into account as well. So getting it right from the start is absolutely crucial. And that's where if you are a seller and you're planning to go to market, and we say this, is if you're having, multiple agents out, please do not go with the one. If you're getting 3, for example, and you get 2 similar valuations and you get the one that's like an extra £20,000 and they can't demonstrate to you, they don't have the evidence, they don't have the facts, ask the questions, get them to demonstrate it, get them to showcase how they came to that figure, interview your estate agent. You are to wait your biggest asset into their hands. So are they just perhaps telling you a figure that's a lot higher just to get the board and get the listing, which isn't going to help you if you're looking to move forward in your journey? So that is something we always say, is please do not feel like you can't ask your agent, where did they get that figure? Did they speak to a surveyor? What comparables have they got for you? If it's not something you perhaps feel comfortable doing with at the time, even afterwards, put it in an email, do it on a phone call if you don't want to do it face to face. But please do ask questions, because it is your biggest asset. But overpricing can really, really damage. Likewise, if you do that and then you perhaps look to move agents because you've not had the activity, your new agent taking on that property will say it again time and time, is damage has been done by overpricing it. Granted, we perhaps will take it on and do our marketing and use our strategy, but damage is often being done by that first agent when they've overpriced it, and we then have to try even harder and try and claw it back. So please just think about realistic pricing when it comes to putting your property on the market.
On the flip side of that as well, though, Sophie, there are times actually when the higher offer is the right offer. So if you look at it, what you said about, the 3 valuations, and one agent has come out and they've completely demonstrated to you where that number has come from. They've shown you all the comparables. They've given you properties of a similar square meterage, to a similar style, to a similar finish, on a similar size plot, and one agent might give you a higher number than the 2 others. Don't just challenge the high one, challenge the low ones too, because have the low ones demonstrated where their number came from, or are they playing it safe? Because actually what they want to do is turn it quickly, when actually that's about their board then, and it's not about doing the best job for you as a seller. So that kind of flips itself a little bit as well. So whichever way that it goes, it's important to analyze the data that the agents are presenting and actually make sure that they do demonstrate to you whether it's higher or lower, because that does also happen. And you don't want to cut yourself short either if your property is worth more than someone else is saying, and they may only be saying that number because maybe they've had a really busy day, they've not prepared themselves properly for the meeting, and they can't demonstrate to you that number, so they may be playing it a little bit safe with what they've shared with you. So challenge on both sides of that actually, but the pricing has got to be accurate, whether that is lower than someone else has told you or higher than someone else has told you.
Absolutely. But that said, May 2025, interest rate cuts bring a welcome tail end. Obviously, we dropped 4.25% just at the beginning of May. We're going to be getting another, revised in June. I believe it's the 19th. So fingers crossed with the Bank of England shaving that 0.25% off the base rates. Mortgage rates are easing, and then confidence is gradually returning to that buyer pool. And you might be thinking, why does that matter? And firstly, first-time buyers in Fife now face lower monthly mortgage payments, which could actually help them more and get their step onto the ladder and get them obviously into their first property. And as I said at the beginning, we actually did a show on this last week, which would be great to go back and watch. But that does then bring that fresh energy into the market, and it supports that kind of healthy chain right from the bottom, which then will help it filter through to the top as well. Home movers as well maybe use better fixed rate deals to upsize or perhaps remortgage, releasing more stock and unlocking those kind of stalled chains. Buy-to-let investors as well, especially those operating in those kind of high yield areas of Fife, may find that the numbers starting to stack up again, particularly with those net rent yields improving as the borrowing costs fall. But what could some other points be, Perrie, do you think?
Well, your buyer confidence is going up, isn't it? So they're getting a little bit of a boost. Rates cuts signal that. They show the Bank of England want to support stability and growth. And that's kind of sets a positive message as well, rather than let's wait and see what happens. It allows people to start moving forward. And as you say, I think the recent interest rate cuts are a real positive. There is an anticipation that actually by the end of the year, they were hoping to have them dip to about 3.5. You're going to get some good two-year fixed rates. We may see something coming in June in regards to the cuts. That will be something that we'll need to wait and see what happens. But it's an interesting one from today because obviously inflation went up. So when the last interest rate cut happened, that happened because the inflation rate had come down. So this morning, inflation rate has been announced that it's come up to 3.5% in April. That was up from 2.6. So that was a big increase. And I think it wasn't really anticipated. So economists are looking at that. And what they're saying is actually it's no surprise that that happened. Because on the 1st of April, everything came together. It was like the perfect storm in regards to people's lifestyles, in regards to the benefits that they had. So their water went up, their gas went up, their electricity went up. Everything like that happened and impacted them. So actually, come April, then actually what they had to spend had lessened. And that's where inflation gets hit because people are not spending. So inflation is going up because the prices of things are costing more because they're not selling in the multiples. So prices were expected to rise to about 3.3. So the fact it's coming to 3.5 is actually higher than anticipated. The Bank of England previously has stated that it expects inflation to peak at 3.7 between July and September and then start slowly falling. So, one of the key things that they wanted to try and achieve was to get inflation down to 2%. And then that was going to allow them for this run of interest rate reductions to hopefully be at the end of the year by 3.5. So whilst what's happened in the announcement this morning isn't really clear how it will impact it and is again just a 1 month kickstart because of what we've seen in regards to everyone's bills going up and the cost of living. So it'll be interesting to really see how that impacts things. And as you say, that announcement is happening on the 19th of June. So whether or not they may hold on to it, the chief economist of the Bank of England, he's like the ninth person on the committee. He's kind of voted to kind of start to stabilise interest rates a little bit and said earlier this week that he feared that the Bank of England, were reducing interest rates too quickly. So it'll be interesting to see if they put a bit of a freeze and a hold on that maybe for another month, or whether or not actually, rather than stuttering to make the changes, that they will make the jump. So yeah, I think we were all quite excited when that last interest rate happened in the way that we saw inflation coming down. But the fact that it's jumped up by 1.2% really in a month, that's kind of 3.5 from 2.6 when actually the target was 2%. So it'll be really interesting to see how that kind of announcement this morning is going to impact us in regards to what the Bank of England will do and how that may or may not impact what buyers decide to do and what sellers decide to do.
Correct. Absolutely.
But having said that, the market is still more measured than it's been since the frenzy that we had in 21, 22, when we saw the graph there. As you say, you've definitely got that stability. We're almost back to pre-pandemic rather than post-frenzy. So I think that's a positive thing. There's room to breathe, I think, and there's room to think about, and what you want to do in regards to your property. But that doesn't mean to say that you can take forever or submit lowball offers if you're a buyer. You have to still be expecting that sellers' properties are valued properly, and they would expect you to offer a realistic offer for their property. And 9 times out of 10, people are still paying over the home report value. You'll have the odd situation where that doesn't happen, but in the main, that's what's occurring at the moment. So desirable properties will always attract multiple buyers. That's just what happens. Yes. But it does mean that there are opportunities, particularly for those willing to look beyond the most in-demand streets, where they can potentially get, not a bargain as such, but may be able to negotiate a really lucrative deal for themselves in a property. Crucially, I think it's important as well for get your mortgage agreement in principle before you start looking as a buyer. I think that's a really important one, because we definitely see that as well, where people go to look at a property, they maybe fall in love with one, and then actually once they've kind of done all their numbers with their broker or their bank, they then discover they're not in a position to offer. And that's really trying. That's disappointing for you as the buyer, because it may be your dream home, but it's also really disappointing for the seller, because the seller may have taken your face value offer and then actually taken the property and marked it under offer, and then in 2 weeks' time you then suddenly realise you've not got your approval in principle after all, and you can't afford that property, or there's something within your circumstances that change, or maybe it's a different property you need to be looking at in the value points. So I think that that's really crucial that you get your approval in principle as well if you are reliant on a mortgage as a buyer. And again, that goes back to what we were saying earlier on about your A game. Get yourself ready to go if it comes that you find the right one for you.
Because you might just surprise yourself as well. You might actually stumble across something that you weren't expecting, especially if you look to kind of widen your search boundaries as well. And sometimes the best value is often found beyond the traditional hotspots. And as I say, you might actually surprise yourself. So there we go. But do you have any final thoughts at all, Perrie?
I think for me, the positive is that interest rates were cut. I think inflation's yet to be seen how that will impact things. We'll get a good idea of that 19th of June. But certainly the economists foresee that it will start to decline again, as in come down. So I think that's a really positive thing. But I think as a buyer, get yourself ready. So, get your approval in principle from your mortgage supplier. And again, if it's not your bank, if it's a broker, if you're looking for some help, we're not financial advisors, but we can certainly put you in touch with somebody that could help. And as a seller as well, it's good for you to understand the market and the position it's in and know where your property potentially will sit. And just get some really good advice would be my advice.
Absolutely. I would second that on advice. And especially if you are thinking of moving in 2025 and you want to discuss your options, then reach out to us. And obviously, we're here to help. We'd also love to hear your thoughts. If you have any kind of hints, tips in terms of selling or buying, or even if you have some kind of thoughts in terms of what we just discussed with base rates and inflation, feel free to put them in the comments. We'll come back to you. Absolutely. But always make informed decisions, and we will continue to say that. Yes.
That's our advice for sure.
Absolutely. Absolutely. Well, there we go. And we will see you, I'm sure, next week for another show.
Perfect. Take care. Thanks all.
Yeah, bye for now.